Hello everyone and welcome to elearnmarkets.com YouTube channel. When you hear about the news regarding the monetary policy, you see a lot of buzz going around with respect to the changes in the interest rates or some ratios changing. People talk about various instruments which will impact the economy in return. Now, what are these instruments? Well, let me tell you that through these instruments, government or the central bank precisely, RBI I may say, brings changes through the monetary policy. Monetary policy is the policy of the central bank, that is RBI in case of India, with regard to the instruments under its control to achieve the goals as specified in the RBI Act. These instruments are the bank rate, repo rate, reverse repo rate, CRR, that is the cash reserve ratio, and the statutory liquidity rate. So let us understand as to what each of these terms denote. Now let us understand the various instruments under the monetary policy. These are the CRR, bank rate, repo rate, reverse repo rate, and SLR. Let us understand the bank rate first. Bank rate. It is the rate at which the central bank, that is the RBI, lends to the commercial banks. Presently, the bank rate is 7%. Any kind of changes in bank rate signifies changes in interest rates, which thereby brings changes to the EMI figures. Next is the repo rate. Repo rate signifies the rate at which RBI lends short-term finances to the commercial banks against any collateral of government or approved securities. Repo rate stands at 6.5% presently. Next is the reverse repo rate. As the name suggests, reverse repo rate is just the opposite of repo rate. In this case, the commercial banks deposits their excess short-term funds with the RBI, that is the central bank. This rate stands at 6%. Next is the cash reserve ratio, that is the CRR. CRR is that portion of deposits which the commercial banks are required to maintain in the form of liquid assets with the RBI. CRR is at 4% today. Next is the statutory liquidity ratio, which is the SLR. SLR is the rate at which the commercial banks must maintain assets in safe and liquid form, such as cash, gold, or unencumbered securities with themselves. This rate stands at 21% today. Any kind of changes in SLR often influences the availability of resources in the banking system for lending to the private sector. Please note that all the rates have been taken from the RBI's website. In case of any doubts or queries, do not forget to write us on the email ID mentioned herein. So next time when you hear any news on monetary policies coming up or any kind of related topics or the changes in the interest rates, you can easily analyze as to why are your EMI figures changed or why is the interest rate affecting your installment amounts. Hope we've been able to help you out in understanding this term in the simplest manner possible. In case you liked the video, do not forget to share it with your friends as well. Also, in case of any queries or doubt, do mention your comments on the inbox below. Thank you. Happy learning.